Welcome to Business Mastery with Dawn Kennedy, your quick under 45-minute dose of expert insights and strategies to make a positive impact on your business and life. Let's get started. Hello, and welcome to this episode of the Business Mastery Podcast. Today, we're going to be talking about crowdfunding, talking about ways to finance your business that may not seem obvious, like going to the bank and getting a loan or finding an investor, like an angel investor. I have Carolyn here who's done this and is going to talk to us all about it. So thank you for joining us today.
Thank you so much for having me. This is really exciting.
Can you tell everyone who you are and who you serve?
Yes, my name is Carolyn Haeler. I'm the CEO and founder of Mightylicious. We make delicious gluten-free cookies for everyone who likes sweet treats.
Amazing. All right. So let's talk about how you leveraged crowdfunding to raise money for your business and what that journey looked like for you.
Yeah. Where do you want me to start? It was quite a journey. So
Okay. So you were post startup when you went for crowdfunding. So let's talk about, did you bootstrap the first part before you decided to do it this way? Or did you
I
apply for a loan and just got turned down? How did
I
you?
yeah, no, I did all of the above. Everything.
All of it.
Yes, all of it. So I bootstrapped in the beginning. And so my story is kind of unique in that I came up with the concept. I have celiac disease. I ate a lot of terrible products. And then all of a sudden I was like, I'm going to make a cookie. I like to bake. I'm going to make great cookies because everyone deserves a cookie. I used to be a stockbroker and I have an MBA. So I had a lot of business experience, but I was like, I'm going to make cookies. Made some cookies, walked into a Whole Foods looking for feedback. Um, and they were like, that's the best cookie I've ever tasted. This was like on a Thursday and they were onboarding me on Monday. I was making cookies in my studio apartment. So I didn't have licenses. I didn't have registrations. I didn't have insurance. I didn't have any of that. And you can't just sell cookies to the public. It's a very regulated industry.
Yeah.
Um, so
Even
I
under
got all,
cottage foods, there you can't wholesale them.
yeah, yeah.
Yeah. It's
Yeah.
it's a whole thing. Food
It's a whole thing.
manufacturer.
So fortunately, it takes about 6 months to get onboarded with Whole Foods. I was able to find my commercial kitchen. I was able to get all the licenses and get the insurance and all those things. And it was only 3 Whole Foods locations when I started. So I actually went back to work and started like being a stockbroker again. And on the weekends, bake cookies and just used my credit card. I had good credit score. So I just opened up as many lines of credit like as I could from Citibank, American Express, Chase, just so I had them. And I had access to them. And I had like, by the time it was done, I had over $100,000 line of credit, which is a good amount when you're starting out, and especially because I was starting out so small. So for a full year, I would literally order stuff from Costco, ship it to my commercial facility, bake on the weekends, drop it off at the Whole Foods on Monday, get paid 30 days later, pay off my credit card. So I never really had a balance of more than 10 grand, which I felt was perfectly acceptable amount of risk for me to be taking on personally. Um, and then after a year, I went from like 3 stores to 10, and then from 10 stores to 2 full regions. And now my purchase orders are, 30 grand. And I was like, oh, this is getting serious. And that's when I got business loans. I went to TD Bank, and I did not think that I would qualify for business loans, but I think I got like over 140 grand between a term loan and a revolver from TD Bank relatively easily at a very competitive rate. And so I used that to fund my purchase orders and inventory at that point. Um, when you get to full regions of Costco, you start to sound really important and people start coming to you. And that's when I started looking at crowdfunding because I was like, these term loans are not going to withstand growth. They're great for keeping the size business
Right.
running, but it's not long term because my business is a few hundred grand at this point. I need to get to millions. And, the profit margin in CPG is like 30 to 50%. So if you're doing $1 million in revenue, you need $500,000 in capital just to get to that $1 million in revenue.
Yeah, let's talk about that just real quick because I
Yeah.
think when you bootstrap and when you're using your money and then you're using your cards and you're starting to build your DUNS number, right?
Yeah.
You're starting to build your
Yeah.
business credit,
Mhm.
starting to do all those things. there is a ceiling though where your growth and capacity is gonna be limited by your cash and your cash flow.
100
And
yeah, very
everything.
quickly, very
Yeah,
quick.
very quickly. So, at the time, because I know there's people who are gonna be listening in and they're like millions and you still needed like more capital than that. Let's just again, you're talking about consumer products and goods. The margins aren't that great.
Mhm.
This isn't just like services where you have 1099. By the time you have that many stores, how many employees did you have? Even
I was the only person. I ran the whole business myself. I was graphic design, I was marketing, I'm sales, I was quality control, research and development. At this point, it was just me.
Okay, so with that volume of orders and that amount of, required capital going out, you didn't have employees that were helping you bake or package or any of that?
So, when I was doing it myself, I had some teenagers that I paid, the minimum wage hourly, and they were part of my costs, certainly, but it was very minimal. And then when I hit 2 full regions, now I'm working with a co-manufacturer,
Yeah.
right? So he needs to be paid as soon as he creates the product, and as soon as that product ships to, leaves his facility, he needs to be paid. But I don't get paid for another 30 days.
I was gonna say, so you're on net 30, but
Mhm,
you have to pay for finished product when it ships.
mhm.
All right. So I hope everybody listening in kind of sees like the cash flow dilemma that you get to
Yes.
face.
Yes.
So, when you decided on crowdfunding, you had already gone as far as you possibly could with the capital you've already taken out and invested. There was just no more room for growth. Is that pretty accurate?
Yes. Yes, there was not yeah. I mean, there's room for growth, but it's relatively slow, painful growth,
Yeah.
um, and it limits your ability because you wanna be able to go to a, ShopRite, which is owned by Wakefern, and they have 300 stores. And one of the interesting things about CPG is that in order to get into these stores, and it doesn't matter if it's a mom and pop shop or a huge company like ShopRite or even Walmart is actually an exception. Any of the big retailers like Giant, you have to give them free product
Mhm.
to get on shelf. It's usually one case or two cases, which means you don't break even often for 6 to 12 months.
Right.
So there is in that first delivery. So if you get 300 additional stores, you may get a purchase order for 50 grand. You are giving that product away. And if you don't give it away, you do not get on shelf. What's unique about Whole Foods is they don't do that. They don't have that requirement. There's no free fill, which is why my sort of anointment into CPG was rather like miraculous. That Whole Foods was my first customer. They were able to take me on when I had like nothing, and I was able to grow slowly with them to the point where I was, fulfilling 2 full regions. And then in order to get additional clients, you need just capital to just burn. So that is where it starts to get sticky.
All right.
And
So
this
you
is normal within food. Like 2 cases is relatively cheap. Some retailers have I'm dealing with a retailer now that it's 20 grand per SKU.
wow.
Yeah,
Okay.
yeah,
Wow.
yeah.
Okay. Because
And
they're they
often it doesn't even this retailer comes with a guarantee for 12 months, but I will not break even in 12 months. So they will guarantee that they'll keep you on shelf. Some retailers, you give them free fill and they can kick you off shelf 2 months later.
right.
So you would never get paid. So it is operationally, the operational costs are not capital intensive. It is relatively cyclical where I'm getting a purchase order, delivering that purchase order, and then getting paid 30 days later. That's a pretty good cash flow. But the operating costs to get on shelf is very expensive.
Okay. And that's when you went to crowdfunding?
Yes. So I did everything where I reached out to so I went to Yale Business School. So my first plan of attack was to see what kind of angel or family office I could attract. So I sent out a lot of emails to people who I thought would be interested and we're talking to angels and talking to investors. One of the hurdles is to get like really serious angels involved in CPG. You have to get to that $1 million mark. To get to that $1 million mark, you have to have a $500,000 liquid in capital, which is a lot of money.
Not
Um,
licking ice cream cone, right?
yeah.
So
Yeah, it is. It is absolutely there's so many, chicken and egg in this industry. that so they all were very interested, very excited, were unwilling to make a commitment. I sent out the email was received by someone who was in, involved with Yale, but also like an alumni of Yale, but also involved in crowdfunding. And he happened to be gluten-free and had an autoimmune disease and was very interested in my product and facilitating more products like mine on the market. Um, and he was the one who helped facilitate my success in the crowdfunding atmosphere. I thought about crowdfunding. I was sort of talking to angel investors, and this is during COVID. So, like, people, I literally lost touch with people for months because of second wave COVID in 2021. Like, people literally got sick, and I thought they were like ghosting me. They were literally just had COVID. So it was an interesting time to be raising capital. And I was talking to one of my closest friends, and she had just gotten a job as the head of marketing for a crowdfunding platform. And she was like, Carolyn, there's nothing to lose. There is like a couple grand like fee to like get set up and get on the platform. But if it doesn't go well, you can just close that. You don't have to like continue it, or whatever you raise, you can keep. So I started a campaign just independently, like with friends and family and reaching out to my alumni network. And I paid for marketing. And I want to just caution everyone about marketing firms. I've worked with so many marketing firms over the past 7 years, and they are a self-fulfilling lollipop. They are making a lot of money, and you don't necessarily make anything. And I cannot tell you because used to be a stockbroker. So like I have expectations of performance,
Right.
that I don't necessarily have any control over either because I don't control the markets or the stocks. Marketing firms charge you a tremendous amount of money in retainers. Spend your money in advertising, which may result in negative profitability. And finding a marketing company that actually knows how to get you to positive profitability, I've in 7 years found one. And it's very tricky because they all are they're marketing people, so they sell you the world. So I was referred to a marketing agency. They're like, in addition to your friends and family, work with this marketing agency. For every dollar I spent, they raised $1. So I was like, it's going to cost me 300 grand to raise 300 grand. It's obviously a plus their retainer. So they're charging me a retainer, but then only getting me $1 for every dollar I spend. That's how marketing firms often work. And I was like, this is really miserable. So the crowdfunding platforms are interesting because I did raise 150 grand for friends and family, but in order to raise a significant amount of money in crowdfunding, you have to bring 200K to 300K to the table yourself. Uh,
So how does that work? You just let people know that you're bringing
yeah,
your
you send a lot of emails.
the cash yourself and what the project is and what your skin is and what
Yeah, so when you go online to the crowdfunding, there's a whole page. Like they're creating you a Facebook page for your business basically, and it explains what the terms are, what you're raising, all about your company, all of who are like it's a business plan on a in a interface, right? So your company, how you're going to raise money, your financials in there, any team members you have, it's all in there. All the things that you would see in a professional business plan are up on your page so anyone can go and read it. It's all regulated. It all has to be public. And then you can send that page to your friends and family. Let them know that you're raising capital. They can click on it. They can read all about it. It's very visual. Um, and see if they want to invest. And what's nice about crowdfunding is they can invest $100, they can invest $50, they can invest 10 grand if they want, right? So it's people can get involved in your business. It's at a very sort of like, oh, I really like this person. $50 is your birthday gift, like so there is the ability to raise small amounts. Like I have over 4,000 investors um, via the crowdfunding platform. But you have to be really diligent and aggressive about getting in front of people and be willing to post it to your Facebook page, send an email to all of your closest friends, send an email to everyone you've ever met in your entire life. Send an email to anyone whose email you have, which is not necessarily an easy thing to do. It's not always the easiest thing to ask people for money. I used to be a stockbroker, so I did this as a profession and it was
right.
hard for me. Right? But for a lot of people, they've never asked anyone for an investment or for money. And so getting over that psychologically was really, really, as I was doing this, it was really hard on my wife who works in marketing. And it was like all about relationships. And she was like, she was just, it cost her so much anxiety. And I was like, this is what I have to do in order to make this happen. And people can either invest or not invest. I can't, like, I can see who does invest, but it's not terribly confrontational,
Yeah.
right? So, I mean, letting them know that you're raising capital. Um, it's very similar to all of these sort of like, what's it called? Where the people ask for money for their.
Like the GoFundMes.
Yeah, so it's
Yeah.
very everyone's used to GoFundMe. So this is just a GoFundMe essentially for a business. So the more people who see it and the more people who want to get involved, the more capital you raise. So it's all about, I used to call it in stock, and when I was a stockbroker, it's spray and pray. Is your strategy. Unless you know you have some people who are going to make big investments and are willing to do it via this platform, you want to hit as many people know about it. And you can offer incentives. So if you invest like $50, you get a bag of cookies. If you invest 10 grand, you get to have a private tour of the facility. There's all sorts of different things you can do to get your investors excited and interested in your capital raise.
So this was gonna be my question, because if you're an angel investor, most of the time you're gonna have an equity stake until it's either paid back or they exit, right?
Yeah.
So in the crowdfunding, are you giving equity to 4,000 people who are listening to this
Yes, it converts. The way the crowdfunding works is that, and I'm not an expert in the Reg CF, but um, they don't get paid until I sell. So this is a longer term investment, and it's a crowd safe. So at different points, they convert at different prices.
Okay. So you have these investors, and these investors will be with you
Yes.
for the duration of your business. So I think
Yes.
that's
Yes.
kind of important to point out is if you take on an angel investor and they decide, in year 8 that they've been, paid back, if that ever happens, and they exit, you
Yeah.
get your equity back, right? So this is not just a long-term investment, but these people are actually going to be on this journey with you, and that's really exciting.
Yeah, they're part of your cap table for good or for better or for worse.
Alright, so how much did you raise? Because the number was a little eye-watering when I saw it.
I did. I raised $5 million in
Yeah,
20.
so
Yeah.
again, for everybody listening, driving in the car, you haven't, this is an eye-watering amount of money, and
Yeah.
even if it is with 4,000 people, that's a lot of people who believe in what you're doing, and, that's a lot. So what were you able to do with it once you hit that?
Yeah, I mean, it opened up everything for me. Suddenly, one of the catch-22s or the chicken and egg scenarios that you get in, um, CPG is, the distributors own the customers, basically. There's 2
Mm.
national distributors in food, UNFI and KeHE. And in order to get into Giant and ShopRite and, Wegmans and Kroger and Ralph's and Sprouts and all of those people, you have to be in a distributor. You're like, "Okay, great." So you go to the distributor, like, "I'd love to be a partner with you." The distributor goes, "Great. In order to get into us, you have to have a customer like Sprouts or Whole Foods or Wegmans or Kroger." So you go back to them and you go, "Love to do business with you." And they go, "Great. Are you in one of the distributors?" So it's just like circular loop on like self-fulfilling prophecy or unfulfilling prophecy. And the distributor isn't just going to put you in their warehouse and take up that warehouse space unless you have an anchor account is what it's called. It's easier to get into the independent stores because they are more willing to take risks. Their customer base is usually a little bit more affluent. They're usually looking to be an industry leader, so they want new products to offer to to their customers. So you walk into the independent stores who really want to work with you, but they can't anchor to get you into a distributor. So in order to get anchored, you have to get a Sprouts or a Whole Foods or a Kroger, and they are the hardest ones to get. So it is a very, very challenging industry to get into because I had all this sort of um, momentum and attention around the money I raised. I applied to sort of for both of these distributors, they have like an up next program. Like, we're going to put you in a couple DCs and buy a couple pallets of product for you so that you can go out to all those independents and maybe get an anchor account. And we'll do this for you for a couple of years and see how it works out. And so I was able to get into those programs because of the success of the crowdfunding. Now the distributors are like, "You're not as big of a risk because I know you have capital." I also suddenly, all the brokers who wouldn't even answer my call wanted to work with me because now I could pay their retainer.
Right.
So I got brokerage, I got two of the largest distributors in the US. And that doesn't mean you get national distribution. They usually put you in a couple DCs in your home market to see how that goes. And started building.
Incredible.
Yeah. Yeah. So it starts to open up the doors that previously had been not just closed, but locked.
Incredible. So
Yeah.
yeah, this is an avenue, and I think it's very creative. I'm gonna call it problem solving. I don't think this is a problem when you've grown so much, you need more money. I think that's an opportunity solving, right? Because you
Right.
had all of this momentum and you just needed more money. Then, for anybody who's run a business for any length of time, capital and cash is king, and you have to have it to be able to make big moves.
Mhm.
So I really appreciate this conversation because I think it's a different way of kind of looking at how you can continue momentum and moving forward when it's sort of a non-traditional route, but it's one that's obviously working and not just working for small amounts of money. Um,
Yeah, and I like
you know,
one of the things about the crowdfunding that is nice because even if you don't end up like, say, I've seen people do crowdfunding and then closing the account before the actual round is like taking it down. The reason for that is because getting into one of these crowdfunding sources, getting up on the site, having all the legal paperwork done, having all the financials, being accepted onto the site really legitimizes you and gives you a platform to promote yourself, right? And so people have gone up on crowdfunding and then found angel investors because, they have something to talk about now because now they do have some marketing. Now they have all of this is legitimized because the lawyers have to approve it. Like the crowdfunding platform has lawyers, you have to have lawyers, everything has to be reviewed, it has to go through um, all the regulatory requirements. And that really legitimizes a business. It's going to cost you a few grand to get up there because our costs just to be up there, so it's not free, like, if you cancel your campaign, it's not free, but the risk is minimal, and it does get you that platform, um, and legitimacy that you might not have if you're just opening up a GoFundMe.
I love it. Where can people find you, learn more about your cookies, find cookies, and do you sell them online at all?
I do, so we retail in over 43 states at this point. We're in major retailers like here on the East Coast. We're in Giant and Fairway. We're in HEB in Texas. We're out in all over California, but we're in um, hundreds and thousands of like regional independent shops because we're more of a specialty cookie. So you can find us in a lot of grocery stores near you. If you can't find us there, ask for us. Always ask if you buy something online or want something. Always ask politely. Stores don't want to guess what you want to buy. They just want you to tell them. So go ahead and ask for things that you buy on Amazon. We have a website, which is mightylicious.com. We ship to all 50 states. If you buy 3 bags or more, shipping is free. And then we have an Amazon page as well, Mightylicious.
I love him. All right. So we're going to put all that down inside of the show notes. So if you find this on the day it launches or you find it 2 years later, you can still order your cookies and you can get, um, you know, I guess the celiac, it's celiac. That's the name of it. The gluten-free is for celiac.
Yeah, so gluten
Yeah.
free is for a lot of things. I have
Okay.
celiac disease, there's gluten intolerance, but it can be for anyone who has any type of inflammation, which is
Okay.
most people these
Most
days.
people. Okay.
Yeah.
Awesome. Thank you for clearing that up because I wasn't sure and I didn't want to
Yeah.
misrepresent. So
Yeah.
excellent. All right. So gluten-free cookies. We're going to put that in the show notes. And thank you so much for talking about crowdfunding and how you raised capital, the eye-watering amount. Thank you for being willing to share all that and how your business is going. So I appreciate this conversation.
Oh, thank you so much. It's such a fun thing to talk about and share because I think it's something that can be really useful for women specifically because women are not cannot raise capital as easily as our male counterparts. So this is a really great avenue as an alternate route for women.
Yes, having multiple ways to do things is always beneficial. Having
Absolutely.
those other avenues. All
Yep.
right. Well, we'll talk to y'all next time on the next episode of the Business Mastery Podcast. Take care. Thank you so much for listening to this episode of the Business Mastery Podcast. If you want to learn more about me, you can go to DawnKKennedy.com.
And you can now check us out on YouTube, as well as, of course, any of your favorite platforms that host podcasts. Take care.